可以了。
Hey there, crypto traders. Ian here with the weekly update. And it's been a pretty volatile week in crypto. Just checking on CoinGecko.com. Bitcoin down 4.7% in the week. Ethereum down 12%. A lot of the selling has happened just in the last 24 hours. We're going to talk more about that in a moment. Scrolling down the list, Solana down 18%. This one had a big move up to about 250 on the news of all these digital asset treasury companies that are looking to buy Solana. I think they kind of got ahead of the news that they were actually purchasing Solana, which is one of the reasons why it rallied so much. Chainlink down 13%. Let's see what else we have in the portfolio on the top 50 crypto list. A couple protocols that are actually doing pretty well. Near protocol flat on the week. This one has been a little bit higher. It was above 3 at one point. This will be an interesting one to watch because remember the AI thesis is still out there. AI plus crypto. Near protocol is a layer one, so similar to Ethereum, but it's focused primarily on AI and the intersection of cryptocurrency. And then Story I want to talk about down 11% of the week. This one was 15 and has had a pretty big pullback in the last just couple of days. So we'll talk about Story just in a moment. But I also want to focus on the big news in crypto of the week, and that is that Tether, which is a stable coin, is looking to raise $15 to $20 billion at a reported $500 billion valuation. Now, to just consider how crazy this is, the deal could put them on par with OpenAI. Okay, so if you look at where Tether is right now, it is the third largest cryptocurrency. It's a centralized stablecoin, meaning that if you have $1 in the bank, you can borrow or you can create a Tether token similar to how USDC works. They're both stablecoins. You know, the price should never deviate from $1 because each Tether is worth $1. And they've got $173 billion in outstanding. So they're the largest stablecoin project. And they're looking to raise at a $500 billion valuation. Now, why would market participants, venture capitalists who are giving Tether money, assume that this valuation is so high? Well, because they're looking at how key Tether is going to be to the decentralized financial system. And even though crypto prices are pulling back right now, and, you know, obviously this is one of these weeks where we see the consolidation in the uptrend, which we'll talk more about in a moment as well. Tether is one of these projects, and this raise is just telling you that the future for crypto is going to be very bright, especially when it comes to decentralized finance and anything that's involved in tokenization of securities and being able to transact peer-to-peer without needing a bank. Just a glance on the overall market. So, you know, we've had this big run up. I talked about this in the Strategic Fortunes webinar this week, where the market felt really extended above the 20-day moving average. It's pretty par for the course to see a pullback to the 20-day moving average. A lot of the hottest names in the market right now, like quantum and AI, are pulling back even more than others. Crypto obviously is a high beta, which means that if the market goes up, it goes up more. If the market goes down, it goes down more. And that's why you're seeing more of a pullback in crypto than the overall stock market. The news this morning, though, just a heads up, is that, I don't know if you've seen, Russia has been flying drones. First they flew into airspace in Poland, then they were in Denmark. There was a report this morning that they were flying their own fighter jets over Alaska airspace, and the U.S. had to set up its own fighter jets to intercept it. So, you know, you hope that we can calm the situation as quickly as possible. And the other thing that's hanging over the stock market right now is it worries about a government shutdown. So I would not be surprised if we see a pullback in stocks. They've had a really good run. Now, I don't think we're going to go to the April lows, but it would make sense, you know, maybe pull back to 565 to 575 area before resuming a rally into year end on Fed rate cuts and also the economy re-strengthening again. Let's take a look at Bitcoin. So we are in the middle of, or actually the bottom end of the range, which is typically a good place to add to your long positions. You know, with all the Fed easing coming and all liquidity in the markets, it really puts a cushion under how far Bitcoin can drop. You also have Ethereum, which has fallen back down to the inside of the old range. But I don't think it's going to hold down here for long. Remember, there's these digital asset treasury companies that are just committed to buying Ethereum. So when it falls, they have raised capital in the stock market, and they're going to use that capital to buy Ethereum. The other one that is a prime candidate for this is Solana, where you've got a couple $1 billion in raises in the stock market that are going to be deployed into the Solana token and to hold that and take it away from the market. One other ratio I want to look at before we talk about some stock news is Ethereum versus Bitcoin. What I said in May is that this is the start of a risk-on season for cryptocurrencies. We've seen a lot of rallies happen in the space since then, but we're seeing a pullback in the relationship of Ethereum to Bitcoin, which means it's a risk-off. So what happens is traders sell Ethereum and other assets, and they move it into Bitcoin. It's kind of the crypto version of flight to safety. You see this in the stock market. When the stock market sells off, people buy gold and U.S. treasuries. In the crypto markets, they either buy stable coins or Bitcoin and sell off some of their what's called high beta positions, the ones that are more sensitive to market changes. So this is just par for the course. Again, one thing I want to reiterate is that if you go all the way back to, I'm going to show you a weekly chart of 2000, the first cryptomania, the first time it really hit the mainstream was 2017. And in that year, Bitcoin went from $1,000, it was actually under $1,000 to 20,000. So you had a 20x rally and it just happened in 9 months, okay, in Bitcoin. And within that rally, if we zoom in, you can see some of these red bars. You had 7 sell-offs of 20% or more. 3 of them were 30% pullbacks, okay? So the moral of the story here is if you want to go for 10x, 100x gains, you have to position yourself so that you're not going to get blown up if there's a 20% pullback. Another thing I want to show you is if you go back to Solana in 2020. So when we first recommended Solana in late 2020, it was about $1.50. I don't think it wasn't even on Coinbase back then, so I might have to get the Binance chart. Hold on one sec. This is Solana before they actually traded on Coinbase. They were trading on Binance. So that's where you had to go to buy your Solana back then. And it was trading, you can see right here, you can zoom in because the numbers are so small because it moved up so quickly. But if we go back to December when we recommended, it was about $1.50. And then it went to $4. And then I think it went to like $4.55 and then pulled all the way back to $2.72. And then it had a big move up where it went to 18 and then it pulled back to 8. Okay, this is a 1 week time frame. And then it had another move where it went from 13 all the way up to, at the end of this, it went to 58 and then it pulled back to 20. Okay, so those of you who made 100x gains, 150x gains, understand that you don't need to put a lot into some of these ideas to make lots of money. You just need to be able to sit through these huge drawdowns, which is what we're seeing right now, right? Some of the cryptocurrencies that we've recommended are just massive ideas. Story is a great example of this. So Story had this huge move up to 15, and within 3 days, it's gone down 40%. Now, there's no news on Story. The idea is still there. The idea that eventually you're going to need to authenticate all of the media or anything that's created online and make sure that it's a person that is showing this to you, not a machine. And this is what Story Protocol does. I think, when it went to 15, it probably was ahead of itself. It went too far too fast. But if you look back at how some of these cryptos trade, like Solana back in 2021, you see these massive drawdowns. So the key is, I will reiterate this constantly, is you have to position size yourself correctly. You can't put 25% of your portfolio into crypto. You start with 5 to 10%. If the value of your crypto holdings triples and then you're at 20 to 25% of your total holdings, then you go back to 10%. And the people who have been with me since 2018 understand this and have made lots of money throughout these cycles. But it's all about allocation and position sizing. I don't believe this rally is over yet. I think that we still have a ways to go in Ethereum. I think the cycle is going to end with Ethereum above 10,000. But there are going to be these pullbacks just like there were in 2017 and in 2021, where some Ethereum, for instance, tripled off the lows, and then it's going to pull back 20 or 30%. This is just par for the course. We are in a new era for cryptocurrency. You see all the regulation that's favorable to cryptocurrency. You see the banks trying to get involved. You see these massive stable coins coming and the tokenization, which is just right around the corner, as well as, solutions for the creation of AI media so that we can authenticate it, and people wanted to take back their digital privacy. So there's a lot of narratives right now in crypto, and it gets ahead of itself and then it pulls back. So just make sure you're allocating your position size is something you're comfortable with, because sometimes you might have to sit through pullbacks like we're seeing in the last week. We gave back, the last time we were here, we gave back a full month's worth of, almost 2 months worth of rally. So last time Ethereum was at 4,000 was way back in early August when it first broke through 4,000, went to 4,800, 20% pullback to 4,000, straight up to 4,900, then another pullback, then straight up again, and now we're seeing another pullback. So, these are just this is how crypto acts, and it is a violent monster that tries to shake everyone else. It shake everyone out, and the way to defeat that monster is to make sure that you have a position size, that you've allocated something that you're comfortable with. And so that's just, a reminder that this is par for the course with crypto. If you want to see the 10, the 20x, the 50, 100x gains, there are going to be some pullbacks along the way. I got some great questions on mailbag this week, so let me get to it. Some of you wrote in last week and we didn't get to it because it was a written update, but I want to get through all of them today. First comes from Ted. He says, hey, I'm seeing infomercials on how to capitalize on the financial realities of the Genius Act and the U.S. stablecoin adoption. Is this a lot of hype, or is it truly the next big thing we should be jumping on? If so, how do you recommend we proceed? What coins and how much? Okay, great question. So when it comes to stablecoin adoption, when it comes to this valuation of Tether, okay, the important cryptocurrencies to watch, and I'll show you the category because we focus on this in the Next Wave Crypto portfolio, is decentralized finance. Okay, so think about this. If stable coins are going to be big and there's going to be these tokens out there, you're going to need to figure out how to move them around in the financial space. And the ones that we focused on are the large cap ones. So you've got Chainlink, Uniswap, Aave, Ondo. These are the major Sky protocol, which was Maker. Another one is an Injective. This is another big DeFi protocol. I believe that this is going to be a winner-take-all situation where there are only going to be a limited amount of protocols that are used in DeFi. So there's lots and lots, thousands of these. But I think all the value is going to accrue to the very top. And it's going to be similar to the way our banking system is set up right now, where you've got, 5 major multinational banks, and then everybody else is like a very small local bank. And so, the big 4 or 5 names right here are going to be the winners as the stable coin markets continue to grow and as we start tokenizing securities as well. Thank you for that question, Ted. Next question comes from Jace, and he says, I understand Bitcoin is done making coins, that they're not making anymore, nor they will. How about Ethereum and Solana? Where are they as far as making coins and being diluted in the future? Okay, this is a great question. So Jace is asking about dilution. Now, Bitcoin is not done making coins. There are still miners that mine every block and they get rewarded. I think the reward right now is down to 3.125 Bitcoin per block mined. So you can see the max supply of Bitcoin is 21 million. We've got 19 million out there. So this is about, roughly 90% of supply is out there already. So most of the supply issuance with Bitcoin is out there. So, but they're still making coins. And, the market has to absorb all these new coins that Bitcoin makes every day. Now, Ethereum does not have a hard cap on how many tokens can be mined. This says circulating supply, total supply. That's not exactly correct. And then max supply, it says infinity. The key, though, for Ethereum is that they have a mechanism, and same with Solana, in which you have to burn Ethereum tokens to use the network. And let me just tell you how important this is, because as the Ethereum network grows, and as there are more users and more protocols built on top of it, it means that you could have a situation where supply is declining, where the number of new tokens created on a daily basis is less than the number of tokens that are burned. That's why I think the value of Ethereum will someday be more than Bitcoin, because of the specific mechanism where they burn tokens for usage. If you ever send something or trade something on MetaMask, you have to burn a little bit of Ethereum. It's like $3 or $4 worth of Ethereum. But if you do millions of these transactions every day, or think about billions in the future, that's a lot of Ethereum that's going to be burned on a daily basis. So that's why I think Ethereum is really the most important asset and the best long-term hold in the crypto ecosystem. And same with Solana. Solana has a similar mechanism, but the issuance for Solana is more than the issuance in Ethereum. And it always, if you want to combat this Solana inflation, the best thing to do is just stake your Solana. You can do it in a Phantom wallet. You can also stake your Solana on Coinbase to make it really easy to do. So thanks for the question, Jace. Next question comes from Max. He asks, what's your outlook on Based AI? Okay, so Based AI is a protocol that we recommended about a year ago. It has not done, it did very well at first. It went to $10. And this is not a good chart for it, but it's pulled back. I would not add more to this. They haven't really been updating the protocol, not much development. I think if you want to bet on the AI agent space, the best one to be in right now is Virtual's protocol. Even though this one's not doing as great either, it's a huge narrative, being able to create basically an AI agent that has a crypto wallet attached to it. Obviously there's a huge use case to that, especially in decentralized finance. I think what's going to be really neat about DeFi is you're going to have all these AI agents working in the DeFi space that are allocating capital for you, given your specific investment objectives. And there'll be, virtual agents. They already have built some of them, by the way, that can go find you the best stablecoin yield, right? So instead of having your cash at a bank and in a money market account, you could have your cash in with a DeFi AI agent that is trying to find the highest yield, which can be 6, 7, 8% higher than you can find in the traditional markets. So I think the best AI agent play right now is Virtual's protocols, and then also Tau, which has subnets, but does not have the AI agent ecosystem that Virtuals has. But thank you for that question, Max. Next comes from Devat. I hope I pronounced that right. I apologize if I didn't. He says, can we plan a more structured exit from the market this time, so we're not left holding assets that drop 90%? Could you also share your thoughts on which tokens you believe we're holding in the next cycles? We already understand Bitcoin, Ethereum, and Solana, but beyond those, do you think we should keep anything else or close out other positions? Okay, so great question. So the way I look at crypto is that, the way you should structure a portfolio is 60% to the majors. So you've got Solana, Ethereum, Bitcoin, and then some of these smaller plays like Based AI and Story Protocol. These are like 3% of your crypto portfolio max in there. And, if you get, let's say, a 10x gain in one of them, then it offsets any risk in the others. Some of these are just total binary events. You might have one that goes down 90%, then you have another one that goes up 10, 20, 100x. I mean, if you have two holdings and one goes down 99% and the other one goes up 100%, that's all you need to break even. But if the other one goes up 500% or 1,000%, you still have a way outstripped your losers. And I think the way to think about crypto is there's a lot of early stage investments out there. And, in the venture capital markets where you make these investments, if you're a venture capitalist, and 20% of your portfolio finds a liquidity event, which means that the company goes public or gets taken out by a larger company. The rest of them, don't make it. And that is very similar to the crypto market. So that's why I always recommend structuring the portfolio with a lot of the big crypto protocols that are going to make it. There are going to be around through this cycle, through the next cycle, just sticking with them as the overall majority of your investments. And then, we'll take some shots here and there at some tokens that I think are fitting the right narrative, have great teams backing them. They have the best developers, are seeing strong user growth, and also have a big use case and can see real world adoption. So that's been our strategy since 2018, since we first started this service. It's worked out very well for many people, and that's what we are going to continue to invest in. That's our objective. So thank you for the question, Devat. Last question comes from Jeannie. She writes in, hello, and thank you for sharing your expertise. Thanks, Jeannie. I followed for 5 years with great success. My question is, considering crypto 4-year cycles or cryptocurrencies a long-term hold, many holders say they will sell at the top and buy back at the lows. So that's a great question. Again, it's all about position sizing. You can hold things long-term as long as you have allocated to the space that it is a hedge to your portfolio or an add-on to your portfolio, right? So if you put 50% of your portfolio in crypto, it's going to be really hard to hold long-term because you're going to see these 20 and 30% pullbacks even in the middle of the big bull markets. That's the hardest thing about crypto. You have to understand that as crypto investors, we get rewarded for sitting through volatility. That is the objective. And the only way to sit through volatility is to make sure that your position size is appropriate. I mean, I am not a financial advisor. Everyone's risk tolerance is different. I myself, I do not put more than 10% of my total investments in crypto. I've been able to survive and do very well by just sticking with that. When my crypto portfolio becomes a larger part of my overall portfolio, I just scale back. It's pretty simple. You just reallocate. And so I think that is the best way to play it. It's very hard to time the tops and the bottoms, in my opinion, right? Like right now you could say that, Ethereum has topped at 4,800, but what happens if in the next 3 days, Ethereum reverses and goes to 5,500? I think you're going to just drive yourself crazy trying to pick tops and bottoms in this market. There's technical indicators that we can use, right? So if I look at the RSI, it can give me kind of a better guidance as to where I should be buying. Like right now, the RSI is headed towards oversold territory. Back when, but again, it's not a perfect science. So if you look here on July 21st, the RSI was way overbought. Where was Ethereum on July 21st? It was at 3,800. Okay, it did pull back, but then the next week, it went to even higher. So, it's hard to say that every indicator is going to be perfect. I would say that when it does drop below the RSI, drops below 30, it usually is a good indicator of it's purchasable. It's a better risk reward than buying, when the RSI is flying closer to 100. So thank you for that question, Jeannie. That's it for this week's webinar. I thank everyone for tuning in. Any questions, nextwave@bannionhill.com. Have a great weekend, and I'll talk to you next week. Take care.
Okay, good. Well, I think it's great. 总共是24分